Good afternoon, everybody. Today is Wednesday, the third day of November 2010, and we are live here. The market did finish with some gains here today. We had, a 48-cent rally in the SPY. We've got the news of the election behind us. We've got the Federal Reserve and QE2 behind us, except for implementing it, of course. And so far, so good. We closed right up at 120 and a penny, I guess, here. So you have to be encouraged by this action and look at it and say, that news and surprises tend to follow the direction of the trend. Here we have good action to the upside today. Now, a lot of times it does take maybe a couple days to fully absorb the Fed action, so it doesn't mean it never means that we're out of the woods in the market. There's always risk there, and that's why the focus in an uptrend needs to always be on, are we holding above key levels of prior of support, that is, prior resistance levels and that sort of thing. Well, today we had this was our first level that we're looking at right here, which was basically the levels of late day resistance before that further decline we saw on Monday. And that had initially held, and then of course we had the Federal Reserve meeting and all kinds of volatility in there. But eventually the buyers came back in and took control of the market here today. I don't know what the heck happened to my volume weighted average price on that, but maybe my system's going to crash. And when I lose a study like that, sometimes it's before my system crashes. So hopefully that's not the case. But anyways, we're still in an uptrend, and it's innocent till proven guilty. We've got a rising 10, 20, 50, 100, 200-day moving average, and the path of least resistance is higher. It's really trying to look at all these oscillators and indicators can really confuse the issue. So we have to maintain our objectivity and look at price action, which of course is still higher highs and higher lows. You look at this 65-minute time frame, it's just been a fantastic uptrend. We've got a rising 5, 10, and 20-day moving average in here. So I think that as long as we can, that this week we'll see that basically this 118.50 for Thursday and Friday will be important levels. That's what I think we need to maintain focus on. And as long as we can maintain above key levels of support, then we want to give the benefit of the doubt to the buyers and continue to focus on the long side. Otherwise, it's just a bunch of noise. And again, we got through what was expected to be not only potential. It was kind of what the bearish people have been, warning me in emails about. Oh, be ready, buy the rumor, sell the news, and we've reached this oversold condition and that oversold condition. And there's a lot of value in some of the oscillators and indicators, but not as much value in price. Only price pays just to beat that drum further to death. But looking at the market objectively, I really don't see why we wouldn't go on to reach the highs for the year in the SPY up near 122. Not saying that we'll do it this week, or that there might not be a sharper pullback before that occurs. Really, the key levels I think are probably found right here, 117.80, and then basically down not here, but this low right here, which was about 117.10. Those are the bigger levels of support that until they break, it's just going to be a very difficult exercise for short sellers. The Nasdaq was up again, and this market is really getting stretched, but stretch doesn't mean it can't continue higher. We've seen obviously that this market is up at multi-year highs and continues to add to those gains. So looking at the weekly time frame, we're back above the late 2007 highs, and maybe heading for the high of 2007 at $55 a share in the Nasdaq. We finished real strong in here. If you look at the 1 minute chart, we came down and tested daily S2, bounced super hard after the Fed, and right now I think that this low near about 52.40 will be important, obviously, for the rest of the week, and we're going to want to maintain where we are in relation to today for probably the next week or so until the market kind of, puts the Federal Reserve and puts the elections fully behind us. And a lot of times that's what it takes, is about a week or so. I said earlier, I realized that a couple days to absorb. But we also had this little trend line here in the Qs that didn't get violated. We just continue to move higher, and still above this rising 5-day moving average. So the Russell 2000 is really the market that looks most exciting to me. This market closed right at the highs, and it's been turning sideways really for about 3 weeks now, as it's absorbed this rally. And as we know, prices correct two ways. They either correct sideways through time, or they pull back in terms of price. Now, the Russell 2000 has been riding the first the 10-day moving average. Then we saw support at the 20-day moving average. It bounced strongly from there, and then corrected sideways through time again. And here we are on the verge of what appears to be a breakout. Now, it's important to realize that just breaking a level isn't what really matters, but to sustain the momentum afterwards. And as long as it can sustain the momentum, then then I would be thinking that we're going to at least get a test finally in the Russell of the post. Why do I have such a hard time saying flash crash highs? Anyways, I think we would be looking for at least a test of that, which is up at $72.10. So it's not really that far away. It's 55 cents away. But getting through that is an important psychological event, I think, to have all these markets kind of recovered up through the highs. Followed the flash crash, and then why wouldn't we go on to $74 a share, unless of course this breakout that seems imminent here fails. So we want to focus, I think, as a key level in the Russell 2000 at $70.50. If it was to break that, then we would look at this and say, okay, well, maybe it needs a little bit more time, but then the bigger level would be down near about $69 a share. If we're to break down through $69 a share, that's the bottom end of this consolidation range that we've seen here, and breaking that we'd look at it and say, well, we had a breakout to the upside that couldn't sustain. Now it's breaking through the bottom end of the range. Then that would be maybe a little bit more reason for concern. But those are just theoretical, hypothetical events that may happen. What's happening right now in front of us is that this market is closing at highs not seen since the flash crash. So we're in good, strong, we're in strong technical condition here. If you look at the weekly time frame of the Russell 2000, again, why wouldn't we go on to test $75 a share? 75 has been, big level of support in 07 that became resistance in 08 and is the basis of our highs for the year. To go on and test those highs just 3.5 points away doesn't really seem like a stretch to me, 5% away. And what could get these markets moving higher? Well, we've got the semiconductors that we know broke past that important 29 level after battling with that, and these semiconductors are doing exactly what this is what we want the Russell to do, is that if the Russell is has closed right here, for instance, then what we want to see is that continued follow through on the upside in this Russell 2000 up towards $75 a share, the way that these semiconductors have done what they're supposed to when they break that level of resistance. The one thing that could really get this market going to the upside is the financials. The financials have absorbed all kinds of horrible news. They continue to be the target of pessimism, but realistically they've been just doing a whole bunch of nothing, as we know, between this 1350 range and up to 1510. Recently, the last 3 months basically, we've had that range tighten to 1420 up to that 1505. What's important about that is our level of support, our bigger level of support has done what? It's shown us a higher low, and it shows that the buyers aren't demanding to buy at 1350. They're not waiting for pullbacks at 1350. Instead, they've taken back control on a pretty consistent basis here at 1420. Now, it doesn't mean it's bullish, but if you look at the action in here, what we see is we've got that 10-day and 20-day moving average, which have been crossing back and forth. We've got a 50-day moving average, which is now rising. So the evidence seems to be building that we get across of that 10 up through the 20-day moving average, and we'll have a rising 10, 20, and 50-day moving average. We break past this 1480 level, which is a near-term important area. If we can break above and hold above 1480, well, then it looks like 15 should come very quickly, I would think. And by very quickly, maybe that day. And then if we can see a sustained move up through 1505, or maybe it's a push up to 1505, similar to, we could kind of think of the scenario that the financials at 15. Let's just say that this is the financials at 15. Well, what we had in the semiconductors, of course, it was 29. We ran up to it, pulled back slightly, and then blasted off. That would be a really nice scenario to see in here, is a rally up to 1505, a pullback to 1480, and then we bring in a whole bunch of more new shorts and pessimists who said, oh, it's a failed breakout, and that it pulls back to 1480, and then we could blast off maybe in here to visit the flash crash highs, post flash crash highs near about $16.15. So the financials could really be the catalyst for that bigger push in the S&P 500 up to 125 or 122 rather, and really, I'm not a gambler when it comes to the market, but if somebody put a gun to my head and said, you have to make a bet, long or short, I would have to take a long on the financials just based on money flow. It's nothing on fundamentals, but because the bigger trend in the larger markets, and it seems to be improving so much in here, still within the range though. It's nothing to get excited about, which is why it would have to take a gun to my head to make the trade. But it is, showing that strength. And we look also at the the home builders, which has been this year's kicking, favorite group to kick around. But realistically, we're still off the lows that we saw from 2008, 2009. And bad news comes out where? It doesn't come out at tops. It comes out at bottoms. And, this seems, the news in the home builders, to me, seems similar to what we observed last year in the IYR. And, for some reason I can't type on this thing. So I don't know if this broadcast is going down or whatever, but this 1610, 1605, 1610 level is a big level in the home builders, and we've got that 10-day moving average coming up through the 20 up through the 50, and we've got a rising 50-day moving average. So I think the financials and the home builders could be the area that really motivate the next level of or the next group of long side participants and some shorts to cover in here. So we've got a lot of strong groups in the market, and the earnings have really been good. We've kind of got, I don't want to say they're behind us because we still have quite a bit of earnings due out, but for the most part, from what I've seen, they have been better than expected. We've got the election behind us. We've got the Fed behind us. There's not a whole lot, it doesn't seem, to worry about. So as long as prices maintain, then I think that that those bearish arguments kind of move to the sidelines, and they're going to have to be forced to pay up, and people are going to chase performance into the end of the year. We've only got what do we have, about 7-8 weeks left in the year, and if you're underperforming, you got to start chasing some of the stuff. If you're someone who runs large money, gold and silver got a little rock today in here, but still holding above a key level of support in GLD at 128.50 basically. SLV also, and I don't what the heck's wrong with my keyboard. Maybe I kicked something, but SLV I can't get the chart of because I can't type for some reason. But even the USO, the oil is banging away at these highs, and that's lending a bit, I think, to some of the well, not the casinos, but I was going to say the solar plays. We had FSLR report last week, and again, that's very annoying that I can't type in here for some reason. There we go. FSLR reported and kind of held these solars back, but some of the smaller ones still are acting real strong, like JASO, which had been a great stock. It got hit. It maintains above some important support at $8 a share. You can see they're all kind of consolidating, between that 10 and 20-day moving average. But I think that JASO could get going higher. I think SOLR is a good one. It traps some shorts, I think, underneath that 50-day moving average. But what's the direction of the 50-day moving average is more important than one day's close below it, and a nice recovery up through today. So you look at these longer term charts on these little solars, they still have some real bullish patterns. SOL, JASO, SOLR, even some of the a bigger one like TSL is going to turn bullish, I think, back above about 28 or so. And the casinos, we saw this Wynn Resorts bounce back nicely today. Las Vegas, after earnings, Las Vegas Sands has just been a juggernaut. MGM, there was some news in there today, and that got the group, got more of these going. This Boyd Gaming finally broke that $8.70 level today. So a lot of bullish action in the market. And those are just two groups. Anything that reports earnings, Coinstar with a big short position. Well, I shouldn't say anything that reports with a big short position, but because last week we saw that PWR get smashed with big earnings, big short position, and that sort of thing. But if it can hold up for a day or so, stocks like Coinstar, I think DEC is starting to maybe begin another move higher. There's just a lot of strength all around in this market, and that's really what we need to focus on. Stocks are strong, the market's strong, we're holding above key levels of support. In bull markets, conditions, oscillators get overbought. In bear markets, they get oversold, and people start saying, well, we touched the lower Bollinger Band, or we've got a divergence on this, or this is flashing oversold, but then prices continue lower. Focus on the price action. Let's take a look at a couple of stocks here. And thank you for the retweets, Darren. Who else did I see here? I'm sorry, I got to look at my other screen. Today Trader and Andy, thanks. Also Chart Diva. Let's take a look at FIG. How about a look at FIG for about a 44? FIG, Fortress. Fortress Group has broken some horizontal resistance here at basically four. Let's just back this up actually a little bit on the weekly time frame. Okay. Interesting. I think the shippers are something to start look at as well. FIG on the weekly time frame doesn't really thrill me because we've had just a real choppy range, but on the weekly chart, it looks like it's broken some resistance and maybe could be headed back up towards that 5.5 level, which is obviously a real big percentage move, and it's got a very bullish-looking daily time frame as well. Here we take a look, and we've got a rising 10. It's been holding this rising 10-day moving average, so. It's in a nice uptrend. It's a steady mover here. It's just broken some short-term resistance today at 4.5, and I think with a stop probably at about 440, that the near term should be able to continue positive for this one. Let's see. Sal wants me to take a look at WNR, which I was in today, and then someone asked me, about earnings, and I was in and out of the stock today after I got involved in it. A friend actually pointed out, hey, did you know that earnings are due out before the open tomorrow? And I said, damn it, that I just can't continue to hold the stock. But it looks great. It's this real nice little ascending triangle here on this daily time frame. It was up on big volume over here, lighter volume relatively on that consolidation. We got the higher lows, the more repeated tests of resistance, and like I said, I was in it today because it had broken some resistance. I got involved right in here. Unfortunately, I was made aware of the earnings right before it declined, and I was like, well, screw it. I'm going to, focus on something else. But I like WNR. It's got a nice looking longer-term chart here. you look at it, it seems as though, if it can absorb these earnings and not get hit on them, I think that it's probably headed up towards about that $7.75, $8 a share level. So, but as you pointed out, they do have earnings before the open tomorrow. So that's kind of the wild card in it, but otherwise it looks good. How about a look at TSCO for Flong 182? I've got it on a weekly chart here, so just let's leave it there for now. Beautiful uptrend on this weekly chart. We've got a rising 10, 20, 30, 40 week moving average. It's been holding this 10 week or 50-day moving average. Nice consolidation here for the last 6 weeks or so, going down to a daily time frame. We had, kind of the same thing. We had these, stock was holding the 10-day and then the 20-day moving average. We had a shakeout. It kind of touched down on that 50-day. It recovered very nicely here from that shakeout to the 50-day moving average. And now if it can break this resistance recently, maybe, see, it's tough to say exactly where the momentum should come into this today, to this stock. Maybe you could cheat and buy a little bit above these highs that it's seen this week. So buy maybe a partial position up in here with an initial stop underneath one of these higher lows, which makes most sense to you. But I think above these highs here at 39.85, then it should get going higher, and maybe the full breakout occurs on the daily push above about 40.5 or so. And I might have till midnight today for the New York City Triathlon, says my buddy Montauk Mac. I think I'll probably pass on that one. Actually, I don't. Yeah, I don't think I will. But thank you. Let's see. Any other stocks that we want to take a look at here before I turn it off? I'm looking at the StockTwits desktop, and when it comes to Twitter and StockTwits, I'm not always seeing everything. It seems like I end up looking in one spot, and I don't see a message that somebody posted in a different area that they might have posted on Twitter, and it's not picking up on StockTwits or vice versa. But Markets Trader wants me to take a look at CIB, so let's take a look at this one. Bank of Colombia. So Bank of Colombia, beautiful uptrend here. It's same thing. It kind of had a shakeout down to that 50-day moving average. Found the buyers in there, bounced nicely, and here's a nice tight little consolidation. It broke that resistance. That resistance looks like support here at about $67. We drilled it. Let's go out to the weekly time frame first. Actually, great uptrend on the Colombian banks. I'm sure that the people at Citicorp look at this and get jealous. But you take a look at for instance, 65-minute time frame. Here's that resistance I was talking about. Basically 67.50 resistance, now acting as support. So it's in a great uptrend. We had a little shakeout here today after the Fed. That looks like probably an important level for short-term trading stops. Tomorrow, if it can get back up above about 68 and a dime, it's probably good for a continued move higher. Last one we'll take a look at is for 99TC, which is VECO, and VECO has been in this weekly pattern here of kind of lower highs and lower lows. So it's broken the downtrend line though, and I think that's important on this stock. I'm not, I don't really look at trend lines as a reason to buy, but when you look at the trend line that it broke this week, and you put that in conjunction with, we had this sharper sell. So we had these two sell-offs, and we saw the market. Now we're at a point where back here we saw that 5 to 10-day moving average holding a support. So it would have looked like a good buy right in here, but with stops. And unfortunately, that one wouldn't have worked. You would have wanted to get out on a gap. It broke down, and it kind of went through that accumulation process. Now this resistance at the 37 area has become support. We've got a rising 10, 20, and 50-day moving average, and now we've got this little level here that breaking past this, I think you're probably headed back up towards that 47, 48 level. I don't know when VECO reports or if they have reported yet, but the stock looks like it's on its way. And here on this 65-minute time frame, I like these little higher lows in here. So it makes these thrusts higher, pulls back, and this is just a real nice, healthy pattern where we see these higher lows and higher highs, and we're above a rising 5-day moving average. So maybe a stop below here, or whatever it is that that makes most sense to you. And anyways, I was going to make that the last one, and then I see a new name here, which is Chinello. So Chinello, I'll take a look at MTB for you, which will be the last one we look at. MTB, we've got a declining 10, 20, and 50-day moving average. So a declining 50-day moving average to me means guilty till proven innocent. It means that there's two types of short squeezes in a market. There's a structural short squeeze, like what we're seeing in Coinstar, where the shorts are just screwed. They're positioned wrong. We've got an uptrend, and the shorts are getting squeezed very hard. Then we have what's known as a knee-jerk type short squeeze, where we've got a stock below a declining 50-day moving average. When a 50-day moving average is declining, I generally look at it as guilty till proven innocent. These rallies will typically fail, especially when you see that the stock is coming up to this bigger level of prior importance, which was support back in here. It doesn't mean it will become resistance, but when you see that, I think it's got limited upside left in it. I think it's like I said, a knee-jerk short squeeze. But on the 10-minute time frame, real nice steady movement here. So if you're long, I wouldn't necessarily just get scared out because of this potential for resistance up here. But I think that I wouldn't chase this type of strength. We had bigger support over in here. We're getting maybe a short squeeze rally, and I just don't. I wouldn't get excited about it. I would protect profits if in it, but I certainly wouldn't chase a stock like this. Again, I think it's just a structural short squeeze. So anyways, hope that helped. Thanks for tuning in, everybody. We'll do it again on Friday afternoon. Talk to you then. Thanks.